Heard California Treasurer Bill Lockyer talk about how the country's most populous and richest state plans to deal with a $19 billion, actually it's almost $20 billion deficit to be exact. Dan Fuss, the vice chair of Loomis Sayles, who co-manages the firm's $19.6 billion bond fund, so about the same size as their budget gap. He was listening. He joins us now. It is interesting when you start looking at these numbers. I mean, Dan, Bill Lockyer sounds pretty confident about the future, but it understands that there's some long-term problems. How do you feel about California?
Well, I understand it's very, very hot right now. I'm more in Bill's camp than I am in Meredith's camp, which I guess is...
Meredith Whitney, who...
Yeah. Bill's the state treasurer. He's not going to come on and say, oh, my God. But also the basic underpinnings of that economy, I think, are reasonable. Now, they could be a whole lot better. And the real problem is not the current cycle. The real problem is going forward and dealing with the population mix. They'll get through this, I would assume, just fine. They have to pass a budget.
Would you own California debt?
Well, they're going to issue tax exempts, and the bond fund isn't run as a tax-exempt fund. Okay. If they issued Build America bonds, which are taxable, that's fine at the right price. Yes, certainly. They don't come at the right price. They come at a much narrower spread to Treasury. The market is not anywhere near as bearish on California. So they come with a Build America bond, zip, away it goes. They're big issues. You know they'll be back one way or another. And people, correctly or incorrectly, don't worry about the credit. Should you worry? I am in the don't worry as much as long as the political process, the political process will come together.
Isn't that the problem, though, Dan? I mean, you know, as Bill said, they have the kits. They have an inflow of people, relatively young people. They have a diverse population. They have people out there, entrepreneurs, starting businesses, small businesses. But they have an historic political problem, right? They can't come together on these state budgets, and they have referendums for everything you can think of. So even when they do, the courts will overturn them the next year and make them spend even more.
Sounds like a challenge, doesn't it? Yes. I don't think, you know, some people will say, hey, don't sweat, the federal government's going to bail them out. No, I don't think so. The Build America bonds were a good idea. No, they'll have to solve it themselves. I have confidence that they will, because the one thing they cannot do that the federal government can do is print money. Now, maybe they're thinking about that. In other words, they cannot run a deficit in perpetuity. Eventually, the piper's got to be paid. In other words, you've got to get revenues to match your outlays. And that's a fundamental difference between a state with any sort of political cohesion. If they have no political cohesion, you have a talented workforce in California. You have good education. I'm starting to sound like I'm from there. I'm not. I'm from Boston. But do I sweat the credit? No. Do I sweat how the rating agencies are going to react? You darn betcha. They're going to react negatively. And as they react negatively and bring down the ratings, or say they might do so, it drives up the cost of money to California. But the state's not going away.
Why don't you sweat the credit? I mean, we had just been talking about a story. They're going to Wall Street to borrow money. They did it last year, too. They're borrowing more this time, and maybe they'll need to hold it for longer. Isn't that a concern if every year they need to borrow more and more money?
Yeah, I mean, it is. There are certain mechanical things that favor investment if you're a California resident in California bonds. You know, the tax incentives. Now, the three of us sit around and say, well, maybe our tax rate at the end of this year and next year or the following year is going to go up, the incremental tax rate. And as a New York resident, you worry about the same thing. So you say, well, okay, at the increment, am I better off buying New York munis here, or if I'm in California with a fairly high state tax rate, am I better off buying California? And you say, well, if California is not going to go broke, I'm better off. If they do go broke, they can't collect on their debts anyway, so I'm not going to sweat it.
All right, we're talking a lot about California. I think we've got a minute left, unfortunately, for you. So let me ask you, Dan, when you look around at the bond market at this point, what do you find the most attractive that you think investors should be potentially looking at this point?
Well, right now, the single area that I'm really focused on where I think there is emerging good value is in the sovereign debt in the periphery of Europe. It's in process. Ireland, Portugal, Greece is sort of a special circumstance. That's where the bonds are coming at you.
And that's what you like?
That's what's coming into range. It's time to nibble a little bit.
Really?
Yeah, well, I'm glad you react that way, because as soon as you say you got it,
you say, I'm
it's
going
over.
there.
Then it's over. I might point out California is the same way for a muni buyer.
Interesting. All right. We're going to leave it there, I think.
Yeah,
unfortunately.
excellent. Dan, we appreciate it. Great, as always, to have you here. We are going to